Hello traders, the title of the video is Mastering 38.2% Fibonacci Retracement and Projections like a pro. So I'm choosing my word very carefully. So I'm talking about Fibonacci Retracement and Fibonacci Projection. So when we are talking about Fibonacci Projections, we are talking about Fibonacci Extensions. So you will notice that I'll be talking more about Fibonacci projection, meaning Fibonacci extensions in this tutorial because what we have told traders is that if a financial instrument, rises from point A to point B, all right, and it goes above this high here, the next challenge for the price is what? 138.2% Fibonacci extension level. But I want to go a little bit deeper today because we mentioned it before, traders know about it. And I found a very good example here. And some traders, sometimes they forget about it. That's why I'm talking about 38.2% and also 38.2% Fibonacci projection. So when we are talking about 38.2% Fibonacci projections, we are talking about 138.2%. That's the first one, very, very important level. We are also talking about which one? 238.2%, 338.2%, 438.2%. Anything, any Fibonacci extension or retracement that is containing 38.2% level. This is about 38.2% Fibonacci retracement and projections altogether. All right, this is a very good example here. So you can see here that the price went up, bump here, all right, and finally the common settling line is broken. All right, so it's telling us that bullish momentum is diminishing, it's becoming kaput. To speak a bit of German to you guys, all right, becoming kaput because the common settling line is broken. So where is the next key resistance level? The first one is what? There are many other key resistance levels. The major key resistance level, talking about 138.2%, 238.2%, and so on. So the first one is the red one here. See that the price found a resistance there. Now, if you notice carefully, I was talking about mastering 3 to 8.2% Fibonacci retracement and projections like a pro. So when we are using the word like a pro, we are saying that look for a trading setup. Here it is. If the common settlement is broken, implement a different time frame trading method at those key levels. So this is about like a pro. So here you see here, after this currency bar is closed, all right, you will be monitoring the price action on a signal time frame, and you enter the trade on the entry time frame using a different time frame trading method or a top-down trading method right there. And there was a sell signal here, and people showed it. If you sell it, the first and nearest support level is the first target level. So here it is. See here, this resistance here is the first and nearest. So the reason why you want to be taking profit gradually or securing your gain, here it is. Now, because this common settlement is broken again here, that's a different matter here. So, but the purpose of this video is to remind traders that do not be fixated only on the 138.2% level. So in this example, you can see that price came down a bit. Either way, traders were thinking of a flat correction. The C manual wave of the flat correction, it did not happen. Price turned around. Here it is. What is the next critical, talking about major and critical resistance level? 238.2. You see in that zone. In that zone again, look, all you must look for to trade it like a pro, ask the question, is the common settlement line broken? Do I have a good reason to implement a top-down trading method? In that specific resistance zone, again, 238.2% level, after 138.2% level, the common straight line is broken. Okay, he retested in fact. Okay, I guess he came out on the pitchfork tool with a long shadow piercing through a key level. The candlestick bar, that's what we call the pin bar. And the rest is history. After this candlestick bar is open, he went back about, which is normal. You want to sell, you want to try to go up a bit, and then you sell it down. You sell high and sell low. So this is something you want to remember, that you want to sell. It is normal that when somebody says sell, that the next day you may go up first. All right, or if you want to buy, it's normal that it can go down. All you need to do is to monitor it, stay on it, monitor it, okay? And here it is. It went down, isn't it? So next thing I want to say to traders, okay? Very, very important point. Any lower low, oh sorry, my apology, my correction, because you want to sell, isn't it? Any lower high below the 138.2% level, or 238.2% level, or any Fibonacci extension with 338.2, all right? Any lower low below those Fibonacci key level, a high probability trading setup. The first one. So you see here, we have 238.2% level. What I'm saying is that the first lower high after that, you see this one here? We have that zone. This is the first lower high. Usually, this is a high probability trading setup. Why the candlestick bar is long? Because professionals spotted it. They knew that this was a high probability trading setup, and they all showed it. That's why. Usually, if you find a good high probability trading setup, okay, you'll see sometimes you will not be the only person selling or buying. There will be other traders that are selling together or buying together with you, and it's quite good to do that. Okay, here it is. So the purpose of this tutorial, very simple. Don't think only about 138.2% level. Think of 238.2, 338.2, 438, any Fibonacci extension level with 38.2. Very, very important. All right. So if we are in an uptrend, we want to look for an opportunity to sell in those zones, provided that the common setup is broken, but like a pro, meaning that there is a setup and then there is a signal. The signal did not fail. Now we can enter on the entry time frame. If the signal fails, we will not enter at all. Full stop. Okay, that's it. Any lower high in an uptrend, if the price finds resistance at one of those Fibonacci projection zone or extension zone, all right, and if the first lower high, it's usually high probability, bearish trading setup. Okay, the first higher low, so price going down, okay, and now it goes back above one of those 138.2 to 38.2% Fibonacci projection zone after a down move, all right. Any higher low is a high probability trading setup. Okay, you get it now? Very simple. So this is a very good example. So a lot of traders will be ready to sell here. A lot of traders will forget about 238.2% level. Have I managed to pass that message? I hope so. And this is quite good because, in fact, people saw it down first. Price went back down to retest it because it went above it. A lot of traders say, "Oh, we will prefer to sell it nicely here." Those are the big players. They are the lion's share market participant. They want their cake to eat it, and they had it here. Are you getting me? So if you want, I can do this also. Suppose you see, so price went down. Okay, hold on, please. I have too many lines that I do not really want to remove, especially this one. So if you apply, for instance, Fibonacci retracement in a downtrend, so price went down. Okay, you draw it like this. Okay, too many lines now. I'll try to find where is that 138. I can see now. You need to rely on the information I'm going to give because there are so many. So this is what we are talking about. This is a 138.2% level. If I draw a line there, you have to rely on my information because I have too many lines. So we draw it from price going down from here to here, start going down. We say, all right, the next critical level is 138.2% level. If it goes below that, we'll watch 1238, 338, 438. All right. Now we say that any higher low above one of those 138, 238 level, a high probability. So this is one. This is, you see, this is a 138.2% level. So the first higher low on or near, you see, somewhere near those key level. This is near. It's the first one here. That one here is a high probability. You see what's going on in the market now? Did you see a long candlestick bar there? Why we have this long candlestick bar here? Because it's a high probability setup. Here also, that was a high probability setup. Now, I'm not saying that all the time you're going to see a long candlestick bar, but quite often, because a lot of traders are aware of those setups, professional traders, there's a high chance that a long candlestick bar may pop up. So you want to manage the trend, especially if you are swing trading, so you don't leave too much money on the table. So like this one here, a swing trader may take only 100 people, which is crazy, because you should cream this one gently, all right? Because it's a high probability. So the best time to secure your gain, not to rush too much to take profit, is when you are trading a high probability setup. So you want to squeeze enough profit out of it. Like a juice, orange juice, you squeeze it until the last drop. Now, you want to do it carefully, not with, all right, too much greed. That's what I meant by that. So this will conclude our discussion today about mastering 38.2% Fibonacci retracement and projection like a pro. So you may say, Joe, you didn't talk about 38.2% Fibonacci retracement level, because the 38.2% Fibonacci retracement level is a very important support level. Anytime the financial instrument is going down after an up move, that's the first level everybody's watching. Will he find a support there? Most bullish traders will expect the price to find a support there. And if the price finds a support at 38.2% level, very often it usually breaks above the previous high. Now, sometimes, I'm saying not always, I'm not saying always, but usually, all right? If you find a support at 38.2% level, there is a high chance that it will try to break above it, or it may fail very fast. Okay, we don't want the video to be too long, so that's all I want to share with you today. Remember, 138.2% level, but don't forget 238, 338, and so on. And map the chart up, all right? You'll be surprised, all right? And like this now, you can also change. Okay, you use one projection. Okay, you can, like a TC2000, can go like this. And as it continues to go down, you can change it. Have a 261, you can change it 338, and then you'll start seeing them. And then you can change again 438, and then you can see somewhere down the line, and then you can keep doing that, and you'll be amazed how the market reacts to those key levels. But what is happening is that sometimes we forget, like now we do it this way, we apply it, like suppose I apply it only to this one I'm talking about now. All right, the fifth wave, we apply Fibonacci 138.2%. That's what I did now, this section here. So we apply Fibonacci 138.2% to the last leg of this move from here all the way here. And then people forget about the 238, and they will remove the Fibonacci drawing tool. And then if you do that, you're not going to see the other 38 Fibonacci projection, talking about 338, 438, 538. But they are all there somewhere. But the trading algorithm will be able to spot those key levels, because they are major key levels that you want to watch. All you are doing, you are looking for a trading setup on or near those key levels, minimum common sense is broken, and implement a different time frame trading method to trade. All right, that's it. So if you have any questions, suggestion, or blah, 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 put in the comment section, and of course, I will be recording another video to answer your specific question. I need to remind traders that sometimes I remove video. Don't feel like, George, how come can you remove my, sometimes I remove comments, some comment. Don't think that, George, you'll be rude to me. Why can you remove my comment, all right? Sometimes I do, for different reasons, all right? Sometimes if the comment is not relating to the topic, I may remove it. or if the comment will not help the video, meaning that the Google algorithm, YouTube algorithm may mark the video down because of those comments, I may remove them. Now, it doesn't mean that I don't remove comment quite often, but sometimes I just remove them because of some of those reasons. So recently, I removed some comment at Joe Trio channel. Now, if that is you, don't think that that's rude. Just understand that sometimes I do remove comment for different type of reasons, all right? But it's not being rude to anybody or anybody else. It's about the channel, okay? So thank you for watching, and I will speak to you soon. If this video has been useful to you, please give us the thumbs up. If you dislike it, don't go away. Do something, okay? Mark it down. That will make you feel good, all right? However, if you think that this has been, an amazing tutorial, feel free to share with your friend on the social media. The best approach is to use a demo account, practice, okay? Work with it fast, okay, until you master it, or you may start learning it. Continue to do so. Polish it until you become better at it, and then you own it. That's all we wanted to do, all right? Do not use it on a lower time frame. This strategy you can see now on the monthly chart makes sense. And then you go on the family time, you see all kind of things going on because of the higher time frame key levels. So especially for new traders, somebody may go, all right, now I can do that on the family time frame, I can do that on the 10 minute. Yes, but you're not going to see consistency on those time frame because it's just market noise. I won't lie to you. Okay, it's about market noise. You want to personally, you can draw those key level like on a monthly chart, and then you switch to the lower time frame. That would be a better approach. Okay, or minimum. All right, daily chart, weekly chart. But personally, I use it on the monthly chart. Okay, so that's all. Thank you for watching, and I will speak to you soon. Subscribe to our YouTube channel, Day Pro Traders, because more than 60% of our viewers are non-subscribers. Can you believe that? 60%. Only 30% of our subscribers are watching our video. So please subscribe to our channel and be sure to click on the notification bell if you haven't yet subscribed to our channel. And if you click on the notification bell, anytime I post a new video, you will be the first person to be notified. All right? Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about mastering 38.2% Fibonacci retracement and projections like a pro. Happy to meet you all.